Hey, how are you doing? Are we about to see the destruction of fiat currencies across the world, such as the dollar, euro, yen, in the same way as we've seen with the Venezuelan boulevard or the Turkish lira and many other currencies around the world? Well, if you look at recent videos that I did, and I'll just share screen, in this one here, I look at, have we entered a recession? In America, they say no, though they have technically actually are in a recession. Or if we are in a recession, what's going to happen to the dollar? Is it going to get weaker? Is it going to get stronger? The answer in this video is actually both. And well worth watching in advance of watching this video. And finally, if we are in a recession, if we are going to see the destruction of fiat currencies around the world so that they're worth no more than toilet paper, what can we do about it? And obviously gold and silver is one option there for diversification. So are we going to see the destruction of fiat currencies around the world? For many people, this would seem like an impossibility, certainly for the likes of the dollar. However, this expert, Alistair MacLeod, I'm not sure if I'm pronouncing that well, on the Wealthion channel, and wealthion.com is something I'd certainly recommend everyone subscribing to and watching. No affiliation to me, but just a channel I follow regularly, and there's some brilliant experts talking about the macroeconomics about what's going on around the world. But according to this guy, and I'm going to play a few different clips from this guy where he talks about what he sees coming down the tracks, how the destruction of fiat currencies might come about and what that might mean to us. Let's just see what he has to say here regarding, the constant printing of fiat currencies that we're seeing happening all over the world, and particularly in the US, and what that might mean to central banks and others. So let's see what he has to say here.
And it got to the stage where it no longer began to work. The shares sank despite that. But what happened was that he destroyed the currency in the process. And we have a similar situation today where the central banks will try and keep the whole of the financial system going, which basically is not just keeping the banks open for business, but also stopping financial assets from sliding in value. And that's going to require enough money printing to either destroy the currencies through quantity alone, or more likely, destroy the credibility of the fiat currencies that they issue in order to try and support markets. And that, I think, is really where we're going with this. All right,
So as you can see here, he's saying, this constant printing has to have an effect on the fiat currencies down the line. And he's given two possible outcomes as what can happen there. Neither of them are good for the currency itself, or for the currency. So he goes on then to speak about what's happening with the BRIC currencies. And I mentioned this in previous videos. The BRIC currencies being BRICS. So it's Brazil, Russia, India, China, and South Africa. Though there's many other countries now expressing interest in getting involved in what they're at too. So let's hear what he has to say about those.
It's headed towards some sort of new replacement monetary system, and one that does have a hard asset backing?
Yes, I do. We've seen, when I last spoke to you, I think it was about that time that it was evident that a core of nations within Asia, and this was the Eurasian Economic Area, which is really comprised of Belarus and various stands in the middle, sort of between China and Russia, also including Russia and China, were trying to set up a currency which would be used for trade settlement purposes only, rather than circulating alongside national currencies. We haven't heard anything more on that, but it is clear, the way the geopolitical situation is evolving, that that plan is not dead, and they are evolving towards that direction. I mean, the interesting thing is that the whole of if you like, an alternative geopolitical entity compared with the American and NATO-led political entities with which we are more familiar. And if you look at the populations involved, I think in rough terms, like America and its allies, if you look at the Asian bloc, it works out about 57% of the global population. So they're already sort of more or less twice the size of us in terms of people. Now, in the old days, we wouldn't have worried about this because, impoverished nomads who don't really figure in the economy. So what? Who cares? But actually, things have changed hugely in Asia. You've got communications which are being set up, it's developing. Those economies are in an industrial revolution, which is ongoing, despite the problems we see in China in the property sector. That is still ongoing. And we even see that one of the two founding partners of the petrodollar, Saudi Arabia, the other one obviously being America, but Saudi Arabia is now flirting with the idea of joining BRICS. And I have known for some time that in terms of long-term strategic planning, the Arab world have increasingly taken the view that their future is with Asia and not with America and Europe. And apart from anything else, I mean, we're pursuing this decarbonization thing very aggressively. So that sends a signal to all the hydrocarbon producers that their future is not with us. So you can see that the world's gone into two lumps. There is us, we're relying on our financial markets, if you like, to drive things. And you've got a commodity-driven bloc, which is at least twice the size of us, centered on Asia, and also incorporating the whole of sub-Saharan Africa, certain countries in South America as well. I mean, this is enormous. It's far bigger than us. And these guys are all commodity-driven, and they will seek protection from a collapse in our currencies by tying their currencies somehow towards into their commoditized or the commodity-driven economies.
So you can see here, and I actually mentioned this in a previous video, that not only are the BRIC countries, again, Brazil, Russia, India, China, South Africa, are coming together and looking at creating a currency that they can interlink between themselves and would have the potential to become a reserve currency. But there are other groups and countries that are expressing interest in joining in with BRIC countries. And I think one of the key elements will be the Saudi Arabians, because they currently have a deal with America where they sell all their oil, known as the petrodollar, through the actual dollar. And this in itself gives huge buoyancy and velocity to the dollar, and keeps it stable and keeps it as the reserve currency. I think if they were to switch across and move towards the BRIC countries, which, as this guy said, much more an expert than I or others, has seen that that's something that they're already expressing interest in. So things are moving along quite quickly here. Let's see what else he has to say regarding a banking crisis or potential of a banking crisis.
Gold, holding gold, is that it is money and it is to be spent. Then if you couple that with the regularity of banking crises, and the next one coming up, which we are on the verge of, as we've already discussed, is likely to be extremely severe. What I would see is crisis first, and I would see the reaction in the gold price second. I would put in a slight proviso, and that is that virtually everybody in the financial system, except perhaps the people who watch this sort of video, are pure Keynesian economists, and they're driven by macroeconomic theory. And they do not understand that gold actually is legal money. They do not understand the consequences of the public rejection of a fiat currency and how that really does just remove its value entirely. They think that's something that only happens to the Venezuelans. It can't happen to the mighty dollar. And they invest on that basis. So you can see that they are not going to drive the price of gold down. So the first reaction to a banking crisis is probably for money to go into the dollar and short-term US government paper, not gold. And we saw this indeed when the Lehman Brothers failed. We saw the price of gold fall. I can't remember the figures, but I think it went down from something like 830 to 680 or something like that. I mean, it was a fairly sharp fall before it then went up to 1920 over the next couple of years. So this is why you should never, ever buy physical gold as an investment, because you will get whipsawed. There are people out there far bigger than you. It is a huge market. And they are on the other side of the transaction. They will shake you out. And even if you've got a few tens of millions of dollars to put into gold, you will get wiped out if you look at it as an investment. That has been the history of it. But if you have the physical stuff and you just tuck it away and you say, eventually I'm going to spend this if the whole economy goes, as the Australians say, tips up, then that will be the point. You will have learned the lesson and you will have done the right thing.
Yeah, so obviously here he's quite strongly recommending that people should buy some physical gold and indeed silver, and have it there as real money in case economies completely implode, which is something that he is predicting to happen in the not too distant future. So again, it's a case of, what if? There's no guarantees any of this happens, but in his opinion, he sees it as something that's certain, almost certain to come down the tracks. Recession situation is almost certainly coming at this point in time. How bad it's going to be is still up for debate. And what it may mean for the dollar, what it may mean for reserve currencies, what it may mean as to what the BRIC countries might do. And of course, the potential then for, is gold something that you should have in advance of that as a hedge to any other assets, but also a play as to, if economies go, as he said, tits up, then do you have something to protect yourself, if fiat currencies become worthless, which, has happened in many, many countries around the world. The potential is there for it to happen with the dollar, the euro, the yen also. So the final piece from him is a little bit about gold, and I suppose the potential destruction of fiat and what that might mean to the overall value of gold. And there's a really important clip in here. He doesn't give you a value amount for gold, but he gives you an idea of how you could calculate it.
A basis that's relatively better than where it is today. How much are they going to benefit, do you think? An awful lot, a little, just...
Well, an awful lot, because if I'm right about this, the collapse in fiat currency is going to be a lot quicker than that 10-year thing that you sort of suggested. This is something that is now upon us. It's not something which, is in the dim and distant future if policy continues and they manage to kick the can down the road and all that sort of stuff. No, this is, I think, a lot more immediate now. And I would see the destruction of these currencies probably within the next year to 18 months, or probably 2 years at the outside. And it could be quicker than that. You can't really give a price projection as such, and that's something which, of course, investors love to see. Where do you think it's going to go? But what I can do is talk in general terms. What we will see is a collapse in the purchasing power of fiat currencies, obviously. Now, what that means is that, for example, the price of a decent house in a fashionable area, let's say San Francisco or Los Angeles or something like that, will obviously go up, even though the mortgages, which finance these things, the interest rates on mortgages will have risen quite substantially. But in terms of gold, you will find that the price has actually gone down. And it's a combination of the scarcity of gold, physical gold, as real money, being demanded as real money, will lead to a scarcity of available gold, driving up its purchasing power at the same time as the purchasing power of the dollar is driven down by the public's rejection of it. We saw this in Germany in 1923, when you could have bought a house in a very swanky part of Berlin. In 1923, you could have got that for $100. Now, in those days, the dollar was exchangeable at $20.67 a ounce. So we're talking about just a little less than 5 ounces. Now, that house today, I would expect to be the equivalent of maybe $2 or $3 million, something like that. 6 bedrooms, decent house, good address, et cetera, major city. Yeah, I would have thought $2 or $3 million, something, that's probably fair. It could even be a bit more. That's 5 ounces of gold. That gives you an idea what it was in terms of paper marks at that time, goodness alone knows. I mean, it was probably a few trillion paper marks. But in terms of gold, 5 ounces bought you that property.
Okay, and clearly that property today is worth an awful lot more ounces of gold, 1,000 or so, over 1,000 ounces of gold. But you think it'll come back down to that five ounce rate at some point?
Yeah, it's the economic consequences of the destruction of the paper currency. Everybody has far too much paper currency. They try and get rid of it, which means the purchasing power goes down far more rapidly than the government can produce it, or it can be produced in the form of bank credit. It's sort of just.
So again, if you're wondering why he's speaking so quickly, I watch all these videos at double speed, so it takes me half the time to take in the content. But basically what he's referencing there is that should the destruction of these fiat currencies come, which he's believes will happen within 2 years and probably potentially much sooner than that, then he believes, of course, that gold is going to go up very dramatically in value. And when you see the reference he made regarding the value of a house being 2 to 3 million, and that being worth the value of 5 ounces of gold, well, obviously there's a meeting of the two. In other words, the dollar valuation of that property probably goes down, but it still would be worth the value of 5 ounces of gold. So you can imagine if you divide the new price in dollar price and divide that by 5 ounces of gold, it would give you an incredible price on gold itself. So basically he's saying there's massive potential upside for gold, and of course silver with it, should all this happen. And he obviously has a very strong belief that this is going to happen. So I would strongly recommend that people watch that full video. I will put a link to it in the description of my video. I'll also put a link to wealthion.com, because it's a channel, a YouTube channel that I would strongly urge people to follow, because they have brilliant guests. Again, I have no affiliation to them whatsoever, except that I watch quite a lot of their content, and I believe it's really good. Some great experts on there. So if that's the case, if he's saying that gold is going to be, he believes is going to be so strong and so valuable going down the line, is he the only one that thinks this, or are there others? And they often say, don't do what the rich say, just do what they do. So what are they doing, and what are some of the biggest countries in the world doing? Well, if you look at this, and it's another video, it's just a few minutes long, but it's a guy called, and I've referenced him before, Mike Maloney. He's the head of goldsilver.com, and he speaks about the volumes of gold, who's buying it, who's selling it. And let's just have a quick listen to this. It's a few minutes long.
Look at for the month of July, the U.S. sent all of this gold to Switzerland. So that's how much the U.S. lost. But then when you look at who's doing the buying, here's the United States. So this is the same month. These are both July. The U.S. exports 37.5 tons to the refineries that are in Switzerland. Switzerland refines the gold and then sends gold bars, 80 tons. So this is 37.5 tons that left the United States, 80.8, so 81 tons going to China in July. In June, it was 32.8 tons. Here's the U.S. over here. They did export something to the U.S. So this is us receiving something. In May, we received something, but China has been just accumulating and accumulating and accumulating, and this goes on and on. Here's China and India and the United States. So we're sending our gold over to Switzerland to the refineries, but it doesn't come back. It ends up in China, and periodically, this is seasonal, you have these big explosions in India demand. So this is Swiss gold imports and exports with China. So you've got imports here, exports here. So this is from Switzerland's point of view, what they're buying, what they're taking in from and exporting to. And then this is the net. And so it says minus 2,678 tons. Well, it's plus 2,678 tons for China. This is what left Switzerland on its way to China. And you can see with the exception of this area right here at the beginning of the pandemic, it's pretty much constant that China keeps on accumulating. And China is one of the world's largest, or they are the largest gold producer in the world, but almost none of it leaves China. They do send it over to refineries in Switzerland, but then it comes right back. So so even on these months where there's big gold exports out of China to Switzerland, the net, they took more back than they exported. By the way, I want to point out, there are these net lines. So you have to invert this line for what China is accumulating. This is the cumulative exports from Switzerland into China. This is the United States. And what you see is there's this constant flow out of the United States to Switzerland and then to China, except for these emergencies that were going on at the commodities exchange. Now, I'll get into those some other time. I'm currently writing about this for a book that I should have released within the next few months.
So again, as you can see, what we're seeing here is that the likes of China, India, Russia are some of the biggest importers now of gold. China is the biggest producer of gold, yet is also one of the biggest importers of gold. You'd have to question, why is that? Obviously, they may look at it and see it as a hedge, or maybe they're lining up for something else. The same can be said for Russia. If you look on here, just move this. China has been the world's largest gold producer since 2007, representing 11% of the world's total mined gold production in 2019. Currently, China's gold mining industry is transitioning from quality-driven growth to quality-driven growth. Having developed for 17 years, gold trading volumes at Shanghai Gold Exchange total, 68,000 tons in 2019, making it the largest spot gold exchange in the world. China is all about producing gold and importing gold. It's importing more than anywhere else, plus it already is the biggest producer itself. Why is that? Here we also can see, just move this again, that the size of the shipments signal China's dramatic return to gold bullion market. In 2019, its imports ran from 3.5 billion a month. That's roughly 75 tons every month coming into China, as well as the stuff it's producing itself. So you can see here that China is producing and importing gold at an enormous rate. Why is that? Here we can see this is Russia and Putin. More than half of all gold added to central bank reserve assets in the third quarter was produced or purchased by Russia. 55 tons out of 96 metric tons, the World Gold Council reported. In total, Russia's central bank has bought about 150 metric tons of gold so far this year, Bank of Russia chairman has said. Also, we see here, Russia is the biggest gold buyer in the world right now. They're only the 5th biggest holder of gold in the world. So they're the 5th biggest holder, but they are adding at a greater rate than anybody else. It is also one of the biggest producers of gold in the world. So again, we have both China and Russia being the top few producers in the world, but they're also the biggest importers in the world of gold. No coincidence. We already saw in the previous video that India is also importing huge amounts. So what's happening here? Why are they taking such a huge interest in gold all of a sudden? Well, in previous videos I've shown, they have absolutely came out and stated that it is their intention to create their own reserve currency between the BRIC countries, and these BRIC countries now are importing vast quantities of gold. They have also stated that their intention with this reserve currency is to back it with oil and gas, their basket of their own currencies, and gold and silver with precious metals. So, it all seems that they're lining up here to make a move on this, and they've been building towards this over many, many years. And finally, the one other thing I would say is just recently, in the last couple of days, has come out that China forgives debt of 17 African nations. What do you think is happening here? They've forgiven debt, very significant amounts of debt that was owed to them by African countries. They're just forgiving it. Why might that be? Maybe they're aiming to bring in as many African countries into this BRIC arrangement as possible, and that will bring them to far in excess of 50% of the world's population. Far in excess. So if they manage to bring, and bear in mind, Africa is another extremely rich in precious metals, gold, silver, copper, lithium, etc. And now we've 17 countries here that are going to be looking very favorably on what China is doing, and there's every chance that they can then get them to buy into using the BRIC potential reserve currency right through with Africa as well. So to me, there's an awful lot of signals that, number one, we're either in a recession or getting very close. It could be one of the worst recessions that we see in most of our lifetimes. The dollar is under extreme pressure and has every chance of being devalued. It's in which case there's a highly likely for it to no longer be the reserve currency. If the Saudis decide that they're going to move from selling their oil and gas, particularly oil, through the dollar and move that across into a new potential reserve currency, then we see massive changes. And based then on what we saw in the earlier video, the recommendation from them would be certainly you should own some amount of gold and silver. So I guess the bottom line in all of this is you should always prepare for every potential outcome. What if what we just described were to happen? Are you prepared? And if not, how can you from here? Well, the suggestion would then be by them is, maybe you should start buying some gold or some silver. You can buy silver for as little as $25, $6, $7 per coin, per ounce. Obviously, gold's at a different level. It's, around $1,750 at the minute. But of course, you can buy smaller than ounce coins. So maybe it's time, if you haven't already, to start looking into buying into gold and silver. And if you already have some, maybe you want to think about adjusting the quantity you have. It all depends on what outcomes you think might be happening and how you can best prepare for that. In following videos, I'm going to also look at other possible assets that you should own. It's good to be diversified. And again, while I offer no financial advice, I'm certainly not a financial advisor. I think it's well worthwhile to look at what other options are out there. You know, should you have some in cash? Should you have some in property or land? Maybe, you know, not everyone can afford to go out and buy property or land, but then maybe you have a solution for that too. So if you like this content, please like it, share it, and certainly subscribe. I have many more videos coming along these lines. Thank you.